estimated that globally we need to invest about $4 trillion a year to meet infrastructure demand. Now, institutional investors have been investing in infrastructure for over 30 years. And if you look at APRA's figures, it suggests that over 8% of all APRA-regulated funds are invested in infrastructure. So it's a long-standing, well-understood asset class, but it's also an asset class that's been particularly hard for smaller wholesale investors to invest in, particularly if you're looking for an unlisted exposure. So I want to talk to you today about why you should have infrastructure in your portfolio and why now is a particularly good time to invest. We invest in infrastructure because it provides us with long-term stable cash flows, it provides us with moderate capital growth, it provides us with CPI protection, and most importantly, it provides us with really low correlation with other asset classes. And it really is that low volatility, low risk, low correlation that makes infrastructure so attractive and why it makes up such a large part of industry super funds and large institutional investors' portfolios. So looking at this chart, you'll see from the blue line, that shows what you would have received return-wise if you'd invested in our flagship diversified infrastructure fund 10 years ago. The returns that the fund's generated over that period, it's generated net annual returns of close to 10%, and importantly, over 5% of that's been in the form of yield. Now, the rest of this chart shows the return that you would have received on the grey line if you'd invested a similar amount at the same time in equities, or on the orange line, an investment in infrastructure. Now, we're very proud of the returns that we've achieved over the last 10 years, but it really is the low volatility and the low correlation that I want to highlight from this chart. Now, I'm often told that I don't make infrastructure sound exciting enough, and I do find it hard because it's supposed to be a boring, stable asset class. But we do invest in really exciting assets. We're investing in real, tangible assets that are essential to our lives and essential to the economy. If you look across our portfolio, we're investing in things like airports. We own 100% of the Sunshine Coast Airport. We own part of Darwin Airport, Alice Springs Airport. We're investing in other broader transport assets, light rail, ports, assets that are essential to supply chains, and also to investing into social infrastructure like hospitals and, of course, the energy transition. Now, all this infrastructure is essential, and it's stuff that we use every day without really thinking about it. And it's the essential nature of infrastructure that makes those cash flows more predictable. We're investing in businesses that have really strong pricing positions and pricing power in their markets. We're investing in businesses that have really high barriers to entry. And these are long duration assets. These are assets that have a life of 30, 50, 100 years, and they yield well throughout their lifespan. So those three words, tangible, essential, and predictable, or more predictable, as compliance like me to say, they're the three words that really sum up why we believe you should have infrastructure in your portfolio. Now, at Palisade, we've been investing in this asset class for close to 16 years. And over that time, we've built a really large, strong, experienced team and invested in over 30 assets. We've got about $5 billion under management. And reflecting on that 16 years, I'd definitely say that now is a market that is one of the most attractive that I've seen while I've been investing in Australia. Why is that? So we're at a point in time, if you can make it, if you're reading the press and you can get through the articles on Donald Trump and on the CFMEU, you'll very quickly get to articles on the dire need for infrastructure in this country. Whether it's infrastructure to fuel the energy transition or infrastructure to help improve connectivity, infrastructure to protect supply chains, particularly post-COVID, where we're in a market where people are looking to protect rather than to expand. Or even infrastructure that will help get the 122,000 Australians who spend the night on the streets, homeless, into long-term housing. They're all things where significant investment is required at a time when balance sheets of both corporates and government are tighter than they've ever been before. And it's that increase in supply and the reduction in demand for infrastructure from other forms of capital that's making the market look particularly attractive at the moment, and that we think it will continue to over the next 3 to 5 years. It's actually being exacerbated more by the consolidation of superannuation funds. These are investors who've been investing in the Australian market for over 30 years. But as consolidation increases and those funds get larger, they're outgrowing the Australian market, and we're starting to see them invest more and more overseas. And so it really does come down to a question of supply and demand, and that's always a great place to be when you're looking to invest and there isn't a huge amount of competition. The other reason why now is a great time to invest in unlisted infrastructure is because you can. As I said at the start, it's an asset class that's traditionally been very hard for smaller investors to access. We've spent a lot of time developing a product that allows wholesale investors to invest through a feeder fund into our diversified infrastructure fund, giving investors immediate access to the 27 assets that sit within that fund and the yields that it creates. It also gives investors access to all the future opportunities that we develop. Now, as I said, we've spent a lot of time coming up with a structure that we think works very well for the wholesale market, and we're very thankful that product has been rated recommended by both Lonsec and Zenith. So to summarise, at the moment we're seeing a market where we think there is more opportunity for investment in infrastructure at really good prices than there's been for a long time. At the same time, smaller wholesale investors are now able to access the long-term stable cash flows that come from this market in a product that has strong CPI connection and good downside protection. Thank you very much.